All right, this article is coming from Investor Place. The cost of borrowing a MicroVision stock is surging. Now, I have never heard of MicroVision before until I've seen it several times flash through the stock ticker on CNBC. So I wanted to investigate. I just seen rallies. I've seen the price up a couple of dollars percentage wise. It's been crazy. Let's get into the article. The stock received a boost after the company reported first quarter earnings on May 9th. Now, MicroVision operates as a LiDAR company with a focus on automotive market for advanced driver assistance systems. Meanwhile, the cost to borrow fee, cost to borrow to short it, right? What you do is you borrow shares from a broker and then you sell it on the markets, hoping to then buy it back at a lower price. The difference is your profit. So the cost to borrow has been rising 63% compared to a value of 59% yesterday, 48% on June 1st. So it's becoming more expensive to borrow those shares. This fee is usually high, as the average cost to borrow fee for stock ranges. Look at this, from 0.3 to 3%. We're talking, 50+%. A rising or higher CTB indicates strong short seller demand, while falling or a low CTB fee points to weaker short seller demand. As demand rises, available shares to short become more scarce, and that's the reason. In other words, a higher fee reduces the chance that a short trade will emerge profitable. Based on the latest data, there were 47 million shares sold short with a value of 134 million. This is equivalent to short interest as a percent of the float of 27%. In general, short interest above 10% is perceived high, while a short interest above 20% is perceived very high. We're near 30%. The run-up in the stock began about the same time that the company reported its earnings for the first quarter revenue of $0.8 million, up from $0.4 million year over year. Still, profitability remains a major goal for the company, as it reported a net loss of $19 million, or EPS loss of 11 cents per share. Now, before we do go to the charts, I was very interested in just the company. It has a market cap of $1 billion. So this is a meme play. This is, I believe, the retailer going against the smart institutions. And at the moment, the retailers are winning. Probably behind that is Wall Street Bets. Now, because of the small market cap, I don't think there's any options on this stock. Oh, there are options. Oh, very nice. Um, Very nice. Okay. Let me see, June. Oh, but look at this. Oh wait, let's just go out. Let's go out. We're in June. Let's go to the third week in June. That's typically when you get the most of third weekend of the month is typically when you get the higher volumes. Um, okay. So here's one issue. Implied volatility is very high. So what you're paying for the option is going to be very high. Very interesting. Very interesting. Okay. All right. Didn't know this. Did not know that. Okay. I have to explore that a bit more. Maybe I'll get involved. Not through the stock, but through the option market. As you can see, earnings, as the article specified, they're a growing company, right? And until they reach their economies of scale, you're going to see further losses moving forward. But what should happen is the revenue should increase. Now, this is kind of odd in that the revenues have been going down. And maybe that's due to just EV sales going down over the last 12 to 18 months. So let's get to the charts. We're going to start with the monthly chart. This is when earnings occurred. And you can see price has been off to the races, moving up 4x before pulling back today. All right, let's go down to the weekly chart. I must have looked at this. Okay, maybe I did hear of this company before. All right. So you got 1, 2, 3, 4, 5, 6. 6 green weekly candles. Pullback is inevitable. All right, so let's look at, this is Tuesday. And this volume is very high. Very high. This is when earnings occurred. Price was roughly at 250. Wow. Wow. Okay, something to think about for me over the weekend. I got to do some more research. I may want to take a stab and get involved through the options market. Wow. Okay. Not sure what I'm gonna do. Ideally, what I would want to do is sell a credit spread where I bank on time decay to favor my trade, but I'm not sure what's going to happen with price. This is a mini game stock at play, and I got to do more research. Maybe go into the Reddit forums, try to get some information. But yeah, okay, billion market cap. The option market appears to be liquid enough for people to dabble in, and because if you wanted to short, because the premiums are so high, options is another way to play it. All right, thanks for watching. Subscribe, please like the video.